As confidence fades, expect further losses ahead for NIO stock. NIO released its latest quarterly results on March 1st. Both the EV maker's fourth quarter 2022 results and outlook for first quarter 2023 fell short of expectations. As confidence in the re-acceleration narrative continues fading, expect further losses ahead for NIO stock. Let's dive in. Here's why the latest results signal more trouble ahead for NIO stock. Welcome to Timely Investment Research. Sliding lower throughout February, investors in NIO perhaps were expecting NIO stock to kick off the new month with a big move higher, following the release of the China-based electric vehicle maker's latest quarterly results. Unfortunately, far from rallying post-earnings, NIO made yet another move lower following the March 1st earnings release. With both earnings and guidance falling short of expectations, the market correctly bid down shares following these underwhelming numbers. Although this post-earnings pullback for NIO is relatively modest, a bottoming out may not be imminent. This latest disappointing further calls into question whether the company, after under-delivering in the latter half of 2022, will finally exceed, or at least meet, expectations during the latter half of this year. Unless subsequent developments prove otherwise, for now, it's best to assume that this floundering EV stock will remain in a slump on its way to lower prices. NIO stock and recent earnings. For the quarter ending December 31st, 2022, NIO reported revenue of around $2.3 billion. Although this represented a meaningful increase compared to revenue figures from the prior year's quarter, around $1.6 billion, NIO's Q4 2022 figure fell short of the sell-side's forecast, $2.5 billion. For fourth quarter, net losses came in at $838.9 million, or 51 cents per share. These losses were more than double those reported during fourth quarter 2022 and were nearly double what analysts were expecting for the quarter, around 26 cents per share. If that's not bad enough, as I mentioned earlier, NIO underwhelmed with its latest guidance outlook as well. For the current quarter, the EV maker expects to deliver between 31,000 and 33,000 of its vehicles, generating between $1.6 billion and $1.7 billion in revenue. Prior to earnings, Wall Street was expecting first quarter 2023 revenue guidance to come in at around $2.5 billion. With such lackluster numbers, it's somewhat surprising that NIO stock has only made a single-digit move lower since the earnings release. Then again, maybe not. There's still a narrative out there providing shares with some support, but it continues to lose its effect. Why the re-acceleration narrative could keep fading. As NIO today trades for a mere fraction of its all-time closing high, $62.84 per share, you may already think that the story behind NIO has already completely unraveled. Sure, few are holding out that this company remains on track to become a leader in the EV space on par with Tesla. But among investors that are still very bullish on NIO stock, there's still the belief that after many setbacks, this company's liftoff moment will finally arrive. With the release of new vehicle models, China's economic recovery, plus the EV contenders' expansion into overseas markets like Europe, these investors believe that NIO will experience a material re-acceleration in revenue growth, in turn driving a move out of the red and to consistent profitability. This will enable the stock to zoom back to materially higher price levels. However, while many NIO investors still believe in this re-acceleration narrative, their numbers could continue to dwindle. That's not to say NIO is set to experience a hard fall in the immediate future. It may signal, though, if near-term results remain weak, a further loss of confidence in the narrative will keep shares on their current trajectory. The verdict. Most of the latest news out of NIO is negative in nature. I will admit, though, that the company's February delivery numbers, released alongside earnings, were somewhat promising. During the month, NIO delivered 12,157 vehicles. This represented a 43% increase in deliveries versus January. Still, this may not be a sign that the situation here is improving. As implied by the aforementioned guidance, the company, at best, expects March deliveries to beat this figure by only a few hundred vehicles. At worst, rising competition from Tesla, as well as the end of China's EV subsidies, may continue to weigh on demand during this month and through the spring. More signs still point to more disappointment ahead. As this will further erode the re-acceleration narrative, continue to steer clear of NIO stock. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.